Welcome to FinMet Mondays, your number one podcast for all things gold.
Welcome back to yet another episode of FinMet Mondays. Sunil, so much has happened in the markets this last week. To begin with, I had mentioned in our podcast last Monday that although the Fed was beginning to sound a little bit dovish, it turns out that they were very much sticking to their original stance of being very aggressive on interest rates. And also on Friday, we saw that the non-farm payrolls numbers came in staggeringly higher, right, which is a big surprise and jolt to the gold markets. Has it changed the stance for you specifically, or do you continue to remain bullish on gold's prospects?
Hi, happy Monday, Sean. I think the job numbers were a big surprise. I don't think it changes the basic impact for gold, which is gold still remains impacted by the US dollar, and I don't think this big number is going to change this trajectory of the US dollar, which we were saying has probably topped out and is going to slowly drift lower. I mean, we had seen record high dollar against the euro and against the sterling and against the yen. And so I don't think we're going to see those levels again. I think you'll find that dollar will trade in a range but drift downwards. So net, the impact on gold is going to be that gold will still remain stable, strong to stable. You may see some drifts when the dollar strengthens, but then I think ultimately the direction of the dollar weakness will continue, and so we're going to trade in a range and slowly moving upwards for gold.
That's interesting. Let's talk a little bit about the ranges. Right now, you're saying that you continue to remain, let's say, neutral to slightly bullish about gold. So, where do you see gold hitting on the upside?
Yeah, so I think it's driven by the dollar, like I said. So if I don't think the dollar's very close to its earlier highs. I don't think those highs are going to be broken. So I think we saw gold come down a little bit last week towards the 1750 levels, which I think is going to hold on the downside. And then going upwards, I think we'll break 1800 once again in the coming week if the dollar weakens.
Interesting. I think on the downside, and that's where I'm a little bit more focused. I do agree that there might not be severe correction as we had seen in the last bearish run, right? I think last time gold corrected all the way to 1680 and then we saw this huge
Mm.
pullback. I think it's more going to be around the range of 1750 to 1780. I do expect to see some technical buying coming in around these levels because gold has shown that, hey, it has great resilience in these current conditions, but I also do not expect it to break the 1800 level.
I think one more thing
Yeah.
you need to keep in mind is there's also the inflation story, right? Inflation is very much back on the table after this huge top numbers.
Mhm.
So people know that the Fed increases are not going to have an immediate impact on inflation. So there will be some buying on the fundamentals that high inflation means you need to buy gold. So I think that's going to support gold. So we'll see where we stand. I mean, I'm sort of more bullish, I think, than you are, and then we'll see how the next coming days plays out. One other thing people should remember is August is traditionally a very slow month because normally traders go off on vacation and the trading volumes are quite less. So you may not be surprised to see that we may see a little bit of slow trading range in the next few days and weeks in the month of August.
Interesting. Thanks, Sunil. Let's see again how the markets play out with the inflation numbers in focus next week. And yeah, see you next Monday.